Ladies and gentlemen, it is my pleasure to update you on Immofinanz's successful 2018 financial year. Here are the key figures. Our occupancy rate reached a new record level of 95.8%, which also puts us among the market leaders internationally. Our results of operations increased by more than 40% to around 153 million euros, driven by substantial savings in property operating expenses alongside other factors. Overall, the net profit for the period moved strongly into positive territory and came to 217.5 million euros after a significant negative impact in the prior year from the sale of the Russian portfolio. The development of our sustainable funds from operations, which is a key profitability indicator in our sector, also highlights our increased earnings power. FFO 1 from standing investments more than doubled to approximately 85 million euros. This puts us well on track to reach our goal of generating more than 100 million euros in FFO 1 in 2019. Against this backdrop, we plan to once again increase the dividend and propose a payment of 0.85 per share to the annual general meeting. This is a rise of more than 20% per share compared to the prior year. So, as you can see, we are making good progress. This is also reflected by the investment grade rating assigned to Immofinanz at the start of 2019 by the international rating agency Standard & Poor's Global Ratings. The rating is BBB- and carries a stable outlook. This is a first in our company's history and an important indicator of quality. Let's now take a look at our portfolio. This comprises 226 properties with a carrying amount of approximately 4.3 billion euros. The largest part, around 86% or 3.7 billion euros, is accounted for by standing investments. Our portfolio focus on office and retail, along with our clear brand policy, is showing sustainably good results. In the office sector, the occupancy rate increased to 93.7%, and our retail properties are practically fully let at 98.2%. The rise in like-for-like rental income, which is adjusted for acquisitions, sales and completions, of around 3% is also particularly encouraging. As a result, the gross return from our standing investment portfolio was 6.3%, which is a solid level internationally. The focus on our three brands, myhive in the office sector, along with StopShop and Vivo for retail properties, is making rapid progress. Approximately 3/4 of our rental income is now attributable to properties under these three highly standardized brands. Last year we extended our myhive office concept to 3 further buildings and now have 23 locations in 6 capital cities. Our community offering is being very well received. Almost 400 companies with around 32,000 employees make up a unique network which we plan to expand further. With respect to our successful StopShop brand, we are strengthening our position as leading European operator by using acquisitions and own developments to push ahead with the expansion of retail parks. We purchased 8 sites in Slovenia, Serbia and Croatia, which are fully let. As a result, our portfolio comprises 80 StopShops in 9 countries, with rentable space of around 564,000 square meters. The brand has great potential and we are therefore expanding further. Just under 400 million euros, or around 9% of our portfolio, is accounted for by development projects, with a focus on office properties in Germany. These are now being transferred to our standing investment portfolio, following completion in the last financial year. With 2 StopShops in Serbia and our landmark property, the Trivago campus in Düsseldorf, we completed a number of fully let projects and handed them over to tenants. Next door to the Trivago campus, our first myhive office building in Germany is currently being developed. We generally ensure that there is a very solid ratio of standing investments to development projects, whereby development projects do not exceed around 10% of the total portfolio. Our financial profile has also once again been strengthened. Cash and cash equivalents increased to around 632 million euros and gearing based on net loan to value now stands at just 37.3% as a result. And we have further reduced our financing costs, which are now at 1.8%, excluding hedging expenses. Last year, we also took advantage of the opportunity to become the largest shareholder in S IMMO, which is likewise a listed company and recently presented very good numbers for the 2018 financial year. This holding provides a good basis for various forms of cooperations between the two companies. Ladies and gentlemen, we have a clearly defined portfolio with a high occupancy rate. We have further improved our efficiency through cost reductions and have a robust balance sheet with a comfortable liquidity buffer and a comparatively low level of debt. Additionally, we have an investment-grade rating ensuring quick and flexible access to liquidity in the international Eurobond market and highlighting the very good financial standing of our group. The last year has, as a result, made Immofinanz a significantly strengthened player in the European commercial real estate market.